different level. So that makes today challenging because we have proof that price is exhausted, most likely needs a bit of a dip lower. And then so the question becomes, well, how deep? How deep? And that is kind of when you're coming into a session like today, that is what we're really looking to analyze. And that is why I was saying this morning, don't go grabbing, some 2-minute hammer at a level of interest until we have some more firm information, which for me is always going to be 15-minute or 30-minute type of candle, type of structure that I can get involved with. And like I talked about in the recap, or in the mid-morning recap, that's pretty much exactly what we saw, right? And so this was a key distinction. If you guys were in the pre-market live, kind of what I was talking about, we saw it play out just a few minutes later, a few minutes after the live close. Price comes into a level. You'll see this on like a trend day, and I've personally taken plenty of losses like this, and so unfortunately I had to learn the hard way. And I know many of you have also had trades like this. And so it's worth repeating, because if we don't understand this, it'll happen again in the future. But you see some type of signal at the level, right? You're thinking, oh, that's the bounce. Like, I'm here at the level, I'm in the zone where I think price is going to reverse. I have my 1-minute signal, I have my 2-minute signal, whatever it is. And then it's just womp, rolls right over. We don't really want to be standing on some action like this. Like, it's just not strong enough. And this is not the best example because it is pre-market, but from a price perspective, this is exactly how we'll see it unfold intraday. Or you'll even get a little bit of a bounce from that level, like right into a shallow fib, and then it just rolls over and just womp right through your stop. Now the difference is, using the same example, let's talk about a trade at 18,100 right here or right here. These are two trades at the exact same price. You're thinking, oh, they're both 18,100, but we have very, very, very different expected value, simply because, that right side of the V mentality, waiting for price to actually develop that bottom and then give you some confirmation. And that's always visible, always visible on your higher time frames. 15-minute, 30-minute, usually going to give you some really good clues about what's next, especially as we head into regular trading hours open. Someone was asking me earlier this week, I think it was Eric, was asking me about, what do I consider important from the pre-market session? It's just the overnight high, the overnight low, pre-market high, pre-market low, whatever you want to call it. Just essentially this high, right, up through here, and then this low. And then in addition to that, the 2 or 3 candles, 15 and 30-minute, the shape of those candles leading into regular trading hours open. It's always going to give you some very good information about, well, I shouldn't say always, but most of the time we'll give you some very good information about where price is headed once that bell rings. Okay, so this is a super key detail, especially if you were, if you're thinking, oh, I want to grab a short. Well, we don't really want to be fighting this candle. I mean, this is the same concept as I was talking about with the short, just inverse. So your trades are always going to be much easier when you're kind of aligned with whatever that primary 15-minute wave is, right? Because once you have something like this and it's a long, again, you don't have to nail the 18,100. You really do not have to nail the 18,100. You don't have to nail the exact low. You don't. But once you have, price breaking that 18,100, you pretty much know, and you could even wait for the entirety of this candle to close. Because once this one closes, you can reasonably assume that, and There will be times where you're wrong, but that's why we have risk management. But you can reasonably assume that, all right, well, I have at least another 15 minutes to get involved here. So we look for that intraday entry, right? So you get the low marked, right? Breaks up through 18,100. You get the move. You get that big igniting bar, right? Big momentum bar. Then continuation. A little bit of a breather. So if you see this and this closes and now you're thinking, all right, well, now I want to try and counter this. That's understandable. That's reasonable, right? But if you're in the middle of this candle thinking, oh, I want to counter this, I mean, it's the exact same concept we talked about with being careful grabbing longs against these broad sell bars. It's just inverse. Now, once you have, again, price is always just going to give you whatever it is that you need right there. Once you have that, I mean, it's incredibly straightforward. Just wait for that, right? And then now you're thinking, oh, I want a short. Okay, well, probably have at least 15, 30, maybe 45 minutes to really look for it and nail some shorts till this starts to develop, and then maybe you want to hold off, right? Now, as far as this is super key. So if you guys are not tapped into the 15 or 30 minute charts, it's time to start doing that, definitely, because it's only going to elevate your trading. We just see this time and time again. As far as the actual intraday, so then how do you actually apply this concept? Well, for me, my game plan today was to not trade the open, not trade the first 15 minutes. I was not even planning on trading the first 30. Once I kind of see some action, what you don't want to be doing is you have your 18,100 level. You don't want to be buying limit buy orders up here through 18,100 in that kind of opening push. This can work, but what you'll find is that you're not the only one doing that, right? There's a lot of liquidity sitting up here, and then the market moves to grab that liquidity, and you get flushed on. So really, if you want a good entry near the low, again, this is going to be extremely aggressive, but just wait for your higher low right through there at your level. Now, mind you, at the time, the session volume point of control was right here. So this was actually a very strong trade opportunity with those two things in mind. You have session volume point of control right here. So all of the volume from the session, the overnight session, including this little few minutes off of the open, was below us. And we like the volume below us when we're looking at longs, right? It's going to be a good tailwind. So you got your pattern there. It's a nice tight stop, higher low. You got your level of interest. You know that the 30-minute is on your side, right? Remember the hammer, and price has already triggered the high of that hammer. So a really good entry right through here was not involved personally, but that's a strong, although aggressive trade. So if you caught that or you're thinking about that, very good, right? Then once that continues to develop, again, just looking at any other higher low that you feel conviction with getting involved with. Some of the things that we see in the first half hour of the trading session are, especially when it's very one-sided like it was this morning, are just super shallow higher lows, right? Can be very tough to get involved with because without the right conditions, those shallow higher lows, I mean, it's, at least for me personally, is very tough to lean on those. I like a little bit deeper pullbacks. But again, what price is telling us, and price is the ultimate arbiter, is that buyers are pretty firmly in control here. We know that 30-minute is on our side. So, is this worthwhile for a scalp into VWAP? Maybe. I'm not going to call that an A+ trade. There's definitely an opportunity there. And this is right when that first 15-minute bar is really starting to find its close. We're talking about 942 right here. So that 15-minute bar is just about fully closed. And as we know about the first half hour of the trading session, it's usually a one-directional move, right? Don't really want to be fading that directional move ahead of 10 a.m. It's just going to be a low probability type of trade. Once we get into 10 a.m., you can start to see a little bit of rollover, right? But sellers just not really present. I mean, to me, this action just looks like profit taking rather than any real sellers stepping in. So the first trade I personally got involved with was right over here. I posted the executions in this, looking for session highs, and then more notably 18,200. What we had there, this I'm treating this like a pullback to VWAP pretty much, and then we had the confluence of shallow fib, I believe. Yep, right through there. So that adds to the trade, and I'm past 10 a.m. And I know that there is a pretty significant 30-minute buy bar that is now on my side, right? No, buyers are pretty strong here. So reasonably, I can assume that at the very least, we'll get a retest of session highs, and we just see price rip right through session highs. Like it's not even there. And so this is, I love this opportunity. This is really nice. And I do consider this a pullback to VWAP simply because price actually does give an extension move up and through VWAP. Now let's talk about VWAP a little bit more. We can see